What's happening right now in the silver market is unlike anything we've seen in decades. Let's break down what experts and insiders are saying post by post and what it really means for the global metal markets.
Peter Schiff just made a powerful statement, and it's worth paying attention to. He said, silver is up more than $1.50, trading at a new record high above $51.50. A new record high in gold will soon follow. The biggest leg of any precious metals bull market is when silver leads gold higher. Now, this isn't just another bullish tweet. There's real history behind what he's saying. Every major precious metals rally in the past century has followed this exact pattern. When silver starts to outperform gold, it often signals the beginning of the strongest phase of the bull market, the acceleration zone. Why? Because silver is a smaller, more volatile market. When investor demand surges, especially from those seeking a hedge against currency weakness or financial instability, silver tends to explode first. That momentum then spills over into gold, confirming that big money is flowing into hard assets. So Schiff's point isn't just about price, it's about the psychology of the metals market. Silver leading gold means confidence is shifting away from paper money and toward real, tangible value. If silver keeps pushing higher from here, history suggests gold might not be far behind, and that could mark the start of a major long-term uptrend for both metals.
Post by Peter Schiff. Gold and risk assets, including Bitcoin, are up this evening. But while Bitcoin is just recovering part of Friday's loss, gold is trading above $45.50, close to a new record high, as it had no Friday loss to recover. Silver is also near a new record high, trading just below $51. Peter Schiff is pointing out a clear separation between traditional safe haven assets and speculative ones. Gold didn't just bounce back, it's building on its strength, showing real investor confidence. And silver following right behind, near record highs, signals a massive shift toward tangible value. When both metals rise together, while Bitcoin just retraces, it shows where serious capital is starting to move. Post by Benoit Lassalle. Every day, Aya produces pure silver, roughly 100,000 ounces per week. As the world is short silver and looking for metal, silver price will keep climbing. During the last squeeze, clients were offering 25% premium to spot for the metal. Benoit Lassalle highlights something crucial: physical production versus physical demand. Aya Gold and Silver is producing roughly 100,000 ounces a week, but that's a drop in the ocean compared to current global demand. During the last squeeze, buyers were willing to pay 25% premium just to get the real metal, not a paper promise. That tells you how tight the physical market is becoming. Post by Garrett Goggin. Silver shorts better prepare for a full-out shock and awe campaign of physical demand. Garrett's warning is blunt and it captures the moment perfectly. If investors keep demanding physical delivery instead of contracts, those holding short positions could face serious pressure. This isn't about hype, it's about math. When the real metal isn't there to cover the paper promises, prices can move violently. Post by Waymar Silver. Everyone is suddenly paying attention to silver as news of the LBMA silver shortage is now mainstream. Slowly, then all at once. That phrase, slowly, then all at once, says it all. For years, silver has been the quiet corner of the market. Now mainstream outlets are talking about shortages and delivery delays. That kind of public awareness can create a chain reaction where confidence shifts fast from digital claims to real metal. Post by VBL's Ghost. London silver squeezed, U.S. bars sent to cover physical shortfall. Scottsdale Mint. Here's the global angle. Silver bars are reportedly being shipped from the U.S. to London to cover a shortfall. That's not normal market behavior. When metal has to be flown across continents just to fulfill the delivery obligations, you know the system is tight. It's another sign that physical inventories are stretched thin. Post by Oren Elbaz. Silver futures trading opens after its first ever weekly close above $50 per ounce, and the chart is jagged and chaotic. It looks like the chart of an illiquid penny stock. Is the market broken? Orrin's observation hits on market structure. After silver's first ever weekly close above $50, futures opened with wild swings, chaotic, thinly traded, unpredictable. That's not normal for a major commodity. It suggests liquidity issues. Not enough sellers, too much demand. It doesn't mean the market's broken. It means it's under stress. Second post by Garrett Goggin. In 1980, silver traded an 80% premium based on a regression to the gold price. In 2011, silver traded at a 70% premium to gold. Now, silver trades at a 3% discount to gold. Fair value remains about 70% higher at $86 an ounce silver. Probability and mass suggest we still have a long way to go. Garrett's pointing out historical ratios, how silver has behaved relative to gold in past bull markets. He's pointing out that even after this rally, silver's valuation versus gold is still extremely low. If history repeats, silver could have significant room to catch up. Not a prediction, but an observation of past market behavior. Post by Wall Street Gold. Silver detonates. Spot silver just ripped to $50.66 overnight, reclaiming levels from last week's surge. And there it is, confirmation from the overnight session. Silver just reclaimed $50.66, holding above the previous high. That means momentum is still strong, and traders are treating this as more than one-day event. This is what happens when fundamentals, fear, and demand all align at once. What we're seeing now isn't just a short-term move. It's a reflection of decades of imbalance between paper trading and physical reality. But remember, none of this is financial advice. It's education, observation, and analysis of what's happening in real time.
According to Reuters, as reported on TradingView, Goldman Sachs expects silver to perform strongly in the medium term, but the bank has cautioned that short-term risks remain high. Let's break this down. Goldman's analysts see private investment as a key driver behind silver's potential gains, especially as investors increasingly look for alternatives to traditional assets amid changing interest rate expectations. They suggest that once central banks, particularly the U.S. Federal Reserve, begin easing rates, the pressure on yield-bearing assets like bonds will fall. That shift could push more capital toward precious metals, including silver. However, Goldman also warns that the path there won't be smooth. In the near term, silver could face headwinds due to its high volatility and strong dependence on industrial demand. Unlike gold, which has large-scale buying from central banks, silver's price is more influenced by the health of sectors such as electronics, solar panels, and automotive manufacturing. So, if global growth slows or industrial output weakens, demand for silver could temporarily dip. Still, Goldman maintains that in the medium-term outlook, silver remains fundamentally strong. That's because the structural demand from the clean energy transition, combined with investor inflows, could create a significant price uplift once short-term uncertainty fades. In simple terms, Goldman is saying, expect volatility now, but strength later. If inflation stabilizes and rate cuts begin, silver could benefit the most among precious metals due to its dual role as both a monetary and industrial asset. Disclaimer: this video is for educational and informational purposes only. The information discussed is sourced from Reuters via TradingView and reflects Goldman Sachs' recent market outlook on silver. This content does not constitute financial advice or investment guidance. Always conduct your own research and consult a qualified financial advisor before making any investment decisions. The creator of this video does not promote buying or selling any asset. This presentation follows YouTube's community and financial content policies, avoiding trading signals, financial guarantees, or speculative advice. All views shared are personal interpretations based on the publicly available report.